In the global oil market, changes in trade patterns are unfolding. The rise of China as a major buyer of discounted Russian oil as India steps back signals a shifting dynamic in the energy sector. But why has India pulled back and why is China stepping in? Let's break it down. India had been the leading buyer of Russian oil, especially following the imposition of Western sanctions after Russia's invasion of Ukraine in 2022. Russian oil was being sold at a discount, which made it an attractive option for Indian buyers. However, things changed. By July, Indian state-owned refineries halted their purchases of Russian oil. Why? Because the discounts were shrinking and pressure from the United States was mounting. President Donald Trump even threatened to punish countries buying Russian oil, adding geopolitical tension to the mix. With India pulling back, China quickly stepped in. In fact, China has already secured 15 cargoes of Russian oil, with deliveries scheduled for October and November. These cargoes are primarily of the Urals crude, a grade of oil that typically flows to India. The numbers here are significant. Each cargo is between 700,000 and 1 million barrels, meaning China is set to receive a massive influx of Russian oil, filling the gap left by India. But here's the twist. China's oil refineries aren't fully designed to process Urals crude, meaning it won't be a perfect fit for their operations. While China is benefiting from the lower-priced Russian oil, there are concerns over the long-term impact. For one, China is already the world's largest importer of Russian oil, and this deal could reduce its appetite for more expensive Middle Eastern crude. But there's a catch. Chinese refineries are cautious about facing secondary sanctions from the US. These sanctions could be triggered if the US doesn't secure a peace deal between Russia and Ukraine, a move President Trump has hinted at. So, while China may be getting the deal of the century on Russian oil, there are potential risks. So, what does this all mean for the global oil market? For one, India's retreat from Russian oil means a decrease in its crude imports by about 600,000 to 700,000 barrels per day. Meanwhile, China's increased purchases could affect the global oil balance, especially in the Middle East, as Chinese refiners may turn to discounted Russian oil rather than more expensive alternatives. The situation puts additional pressure on global oil prices, especially with the US potentially imposing sanctions. This is a geopolitical game where the stakes are high. Countries like China and India are making decisions that go beyond economics, as they navigate complex political dynamics. As we continue to watch the global oil market, one thing is clear. Russia's discounted oil is still an attractive commodity in an increasingly complex world. India's shift away, coupled with China's expanded purchases, reflects broader geopolitical shifts that could reshape energy trade for years to come.